So in this video, I'd like to go through the solution for problem 16.2a, which kind of is a nice illustration for the application of concepts of job order costing. And so what I did is that I just kind of put it all in a nice Excel spreadsheet, all the content of the problem from the text. And the reason why I did that is because it's a little easier to solve this problem using Excel, because you kind of can collect all the information at the same time. So, and also I marked different parts of the problem with the corresponding letters as they're in the book, A, B, C, D, E, A, F, G, because we're different corresponding to different parts of the problem. So what we're asked to do here is essentially to, basically record journal entries for various transactions that happen. And transactions that happen here, the jobs are being done. There's direct labor, direct materials have been incurred, overhead has been incurred and then applied. And eventually jobs are completed, meaning the whatever corresponding inventory of completed jobs will have to be transferred from work in process into finished goods, and eventually the items are sold, meaning we have to record the sale and record the cost of sales from finished goods inventory. So this multi-step process is illustrated nicely in this problem. So first we're told that material purchased on account for $45,000 in part A, which I kind of recorded in the bottom. So there are the entries. You need to debit direct material. You need to debit direct materials inventory for this amount, which is $45,000, and credit accounts payable for that amount, which is $45,000. Part B, given this big table, which I put kind of over here, by jobs you're given the amount of materials and labor, and also incurred on each job. And also there's something says in the bottom for general factory use, which is the materials and labor used for as part of overhead, which need to be initially recorded in a separate overhead account. And then later on, as we collect all this overhead, we'll apply it using budgeted rate. So first we need to, for part B, we need to record work in process inventory, which is and apply direct labor and materials for the individual jobs first, which we know. So that we know is together is 15,000, materials and labor 26,595. So we need to record that. So we're going to add that up, 15,000 plus 26,595. Then we also have factory overhead, which is this stuff for general use, which is 1,200 plus 5,000. All right. These are debits because these are kind of asset accounts. Then you have what are the credits? Well, you're using direct materials inventory, right? Materials inventory, right? So it needs to be, and we're transferring essentially the materials from direct materials into work in process for the jobs that are in process. And also, so for the overhead as well. So this is the 1,200 part plus 15,000. These are the direct materials which were used. So they need to be taken out of the direct materials inventory. The rest goes to accounts payable because, wages payable. Wages payable because these are, wages that you owe your workers, which is 5,000 plus 26,595. That's this part. Right, this part B, and then part C and D I'm going to record together. So what happened, because these are both overhead journal entries. Well, first it says part C, factory overhead costs incurred in accounts. So the debit to factory overhead, right, and that's going to, and then there's going to be a credit to accounts payable, right? This is part C, and how much is credit to accounts payable? Well, 1,800. But also there's an accumulated depreciation which is being applied to overhead instead of depreciation expense. And that's part D. So the total debit to factory overhead is the sum of these two numbers, $4,300. Part E tells us that the factory overhead rate per machine hour is $30 an hour. So that will involve applying overhead to each individual job. We're told right up here how many machine hours were used for every job. That comes straight from your text. So now I can very easily apply the amount of overheads, which will be the number of budgeted machine hours times the rate. In this particular case, it is $30 an hour and that is the rate it will be applicable to all jobs. So I'm going to put a dollar sign, so when I drag it down, it will give me the same number. Right? So the total amount of overhead applied to jobs is $9,000. And that's what gets transferred from the overhead account into the work in process account. So part E, I'm going to debit work in process inventory, $9,000, and credit overhead, factory overhead, $9,000. All right, so then we are up to part F, which talks about jobs completed. And well, jobs completed implies that you're essentially taking whatever component of inventory that pertains to the completed job that sits in work in process needs to be now transferred to finished goods. So what is that component? Well, that's the applied overhead, which is just calculated, plus the labor part, which we know about, plus the materials, right? And you can calculate it for every job that was completed, and those are these three and plus this one. And that tells me the total amount of inventory needs to be transferred from work in process to finished goods is $38,755. So I'm going to debit finished goods inventory, that amount, and credit work in process inventory for that amount. Finally, part G involves, we're told that certain jobs were transferred to the customers, and the customers were billed for it, essentially sold. And so first you need to record the sale. What's the amount of that sale? Well, you're told the actual billings over there. So the total amount here is going to be $38,050, which is just the sum of the amounts that are given there. So we're going to debit, because they were billed but not collected, will be debit to accounts receivable. And credit to sales revenue. This amount. And don't forget the one final step is that these are items sold. You need to record cost of goods sold. Right? What was the cost of goods sold? Well, it was the cost of inventory which was sold. In this particular case, we've got sold. We sold these three items right here, and we know that the job completed is this amount. So this is $26,200, and you need to credit finished goods inventory for that amount. So this is basically the problem. You're asked, to essentially, in the end of the day, complete the tell us what is the amount left in finished in the work in process, what's the amount left in finished goods. I'll leave it up to you. It's just basically you need to create T accounts and journalize all the entries and compute end imbalances. So this is at this point trivial. But that's essentially how the mechanics of the job costing works. And this is a very nice problem for that purpose. Thank you very much.